more members of the Infosys top management to take us through what they see ahead for fiscal year 2009. TV Mohandas Pai, Ashok Vemuri, Subhash Dhar and PG Srinivas, who head very important functions for Infosys, join in. Thanks very much, gentlemen, all of you. Mohan, let me start with you. From a HR perspective, a personnel perspective, how is FY10 looking? Because we've read reports that you're letting 2,000, 2,500 non-performers go. Will you be very stern on fresh hiring or even let people go throughout this year?
Well, Udayan, first of all, let me say this, that we are committed to keeping the jobs of people. We want to keep all of people. We want to protect their jobs. We have built this company to last. We have, $2.2 billion of cash in hand, no debt. We don't have any liabilities which are not disclosed. So we are a strong company and we want to keep our employees. 2, we have zero tolerance for non-performers at this point of time. If you don't work, if you don't perform, if you don't get a good rating, then we'll ask you to be outplaced. And that's what we had done. But the last year we had 2,000 people in what we call the CRR4, out of which 850 people left on their own. Out of the balance, 50% are put on a personal improvement plan, and the balance 50% are being outplaced. Half of it is nearly over. Because we have to protect the jobs of the great majority. 3, this year we're hiring 18,000 people. Out of 18,000 people, 16,000 will be the honoring of the commitments we made to the campuses last year. We're the only company, I think, in India which has sent letters to all these students saying, please come and join us at Mysore on so-and-so date. Because as a company, we have to be seen as honoring commitments made to people. It'll cost a little bit of money, but we have to honor them. We extended the training period. Instead of 5 months, it's going to be 7 months. So they'll have a longer training period, but the probation period is not extended. We don't take advantage, so that they will have a longer training. 1,000 people will be hired abroad. 1,000 people will be the laterals that will be hired. There is 18,000. We have 3,500 in the first quarter. And we have 105,000 people the beginning of this year. About 10% of people may go. In the sense that attrition is now at 14% for the group and 11% for the services business. So at the lowest point, we have had 6% attrition in 2001. So even if you let 10,000 people go, they go for higher studies, they go for marriages or whatever it is. We got 34% women. It's a real fact. Okay. We are one of the largest employers women in India and in the emerging markets. And
men can go and get married as well, Mohan.
Yeah, men to get married.
Women usually get married to men too, right?
I would think, yeah.
We are not as liberal as
But then the point I'm trying to make is, at the end of the year, we may end up with only 8,000 people more compared to this. So I think we have planned this strategy well, and I think it will serve us quite well.
Just one point on what Bala said, that there will be zero increment at this point. Will salaries actually come down for a large number of people if the increments are zero and variable pays are being cut?
Well, if variable pay depends upon the top line and the bottom line is going to be down, but we're trying to give the maximum variable pay as per a formula. This year, fiscal 2009, it was 84%. Last year was 96%. It could vary. Because the option for us is to keep jobs or to make sure that we hike salaries. We said we'll protect the jobs. And in fact, I won't tell you, and you'll be happy to note this, the board variable compensation for last year is come down to 58% from 100% the previous year. The next level, the executive committee, I'm informing them, is only 65%. I hope they'll be happy. And the next level is 70% for title holders, leadership, and the bottom layer, the rest of the company will get 85%. So we have made sure that we walk the talk, leadership by example, and we take the biggest pain. So we want to send a message to people. We're all together. These are very bad times. We have never seen such times, but we will work together to come out stronger, and we want to keep people's jobs to the maximum extent possible.
You guys in the board don't need compensation. Come on, Mohan.
Well, we are all we are well
off.
Well off. Let's put it like that, Mohan. So just to reaffirm, across all tiers, 0%, because I think the market was working with about an 8% salary hike for FY.
Yes, there is no hike. That means whatever the salary level now will remain here till further notice. Sure. We'll review it sometime later. But right now, no salary hikes.
The largest concerns have been again from your space this time round. Let me give you the worst case analysis for people and tell me if you see that as true, which is that from BFSI, there is no new business in FY10. I'm not talking about existing clients or orders that spill into this financial year, but that there is no new business.
Absolutely incorrect. In fact, the headroom for growth in financial services, both in the existing client base and on addition to new clients, is fairly healthy. So if you look at the 37 new clients that we have added this particular quarter, 12 have come from BFSI sector on both sides of the pond. There are a large number of clients that have in the offshoring space, they're using certain service providers. And because of all the changes that are happening, they are looking for newer players who have a lot more sophistication and bringing to the table the kind of things that they want. There are newer players as a consequence of changed ownership and changed holding in terms of the way their business has also changed, who are looking for consolidation of service providers, so that has also allowed not only the existing incumbents to grow, but also addition of newer players. Our clients in this sector are fairly sophisticated, and they understand who brings what particular niche skill to play, and that's also allowing us. So overall, I would actually think that there continues to be significant headroom, not only in the place in the existing account base, but also in adding new clients to this sector.
Subhash, there's been a few wobbles in your space as well previous quarter. Have those been sorted with your big telecom client in the UK, or does that space remain quite challenging?
No, I think if you look at the relative share of revenues that we have, that telecom has given this quarter, is pretty much flat as of last quarter. And this is against the currency headwinds, because about 50% of our revenues in this business comes from outside of the United States. And from severely depreciating currencies like the pound and the Australian dollars and the euro. So to have maintained the same revenue share of Infosys, I think has been an achievement. I don't see that that this is going to be a big challenge in terms of, I mean, the demand is still intact. The companies are still looking at futuristic projects, although we see a slowdown in those execution of those projects because of the budget problems. So overall, I think this industry is not as badly affected in terms of just demand in their business as maybe some of the others.
BG, the market has been concerned about project deferrals as well that have come in from Europe. What's the experience been, and more importantly, what is it that you see in Q1?
See, overall in Europe, again, because of the very nature of the market, that it is fragmented, definitely yes, in UK there has been a slowdown. If you look at overall Europe performance, on the continent for the full year, we added incremental 100 million in revenues, additional revenues. So the continent has been growing, but it is still not, it's been dwarfed by the slowdown in UK. So if you look at scenarios, again, by sector, by country, continent has always been slow in decision making. And in the current context, all the more so, because there has been deferrals. But in spite of that, because of the cost pressures the continent is also facing, we see a reversal of their outlook in terms of approaching the offshore model much more than in the past. In all the large deals, we see that offshore play has become an integral part of the expectation of the clients in the continent. However, because of the slowness in the decision making, you don't see that uptake, which is offsetting the slowdown in the UK. UK has been dominated by the financial services, telecom and retail as far as our revenues are concerned. And that has had a slide. So, but in the long run, because we continue to invest in Europe, if you look at the services, service footprint in Europe, it's extremely rich. Consulting, BPO, system integration, ADM, all of them. And since we have been able to establish ourselves pretty well in the continent, once the market opens up and some of the current large deals in the pipeline close, we will see this coming up.
There's concern though, BG, about pricing in Europe. I mean, it's estimated that the cut could be far sharper than what you're working with right now, which is as high as 8 to 10%. Would you say that is likely for the European space?
Again, in relative terms, actually the pricing pressures in Europe is less than as compared to the US. And this cuts across sectors. Of course, by sector there is some variation, but in the continent the pricing pressure we have not seen as much as in UK and the US. So I don't see that being the challenge. The challenge is still the decision making. The challenge